This is the briefing for Friday, March 3rd. Well, I want to look at the markets in somewhat of a fractal nature today because I think it's important. Um, in last night's briefing, I talked about this rotational pattern that the indices, this is the spiders on a 30-minute basis, this is the Qs on a 30-minute basis, and you can see the rotational pattern that we had. And then on the Tuesday, I guess it was Wednesday night, I talked right here, about the potential to break this low would be a breakout in the short-term time frame. In other words, this time frame that would suggest a breakout to the downside. Now, we closed near the low of the day on that day, and so it did suggest breadth was declining going into here, so it did suggest the potential for a lower low, and that's exactly what we got in yesterday's trading. But there was no follow through in yesterday's trading, and then we ended up spending a part of the day in another rotational pattern just above this support level at the 393 level. And then, of course, with the news announcement of the Fed president that suggested that the Fed would ease on interest rates in the summer, the market took off, and then there was, of course, follow through in today's trading. The same thing occurred in the Qs. You can see the gap down, and then, of course, the immediate retracement, the pause until the news event occurred, and then, of course, the rotation back up. Now, on a short-term basis, the upper extreme or resistance on a short-term level was 402 in the spiders and 296 in the Qs. Well, we opened up higher in today's trading. There was not a divergence in breadth, as you can see there. In fact, breadth was a little bit stronger than it was in yesterday's trading. And the same thing with the Qs or NASDAQ breadth. NASDAQ breadth was strengthening also. So that suggested the potential for another move to the upside. Whether 402 or upside resistance was going to be broken was yet to be determined, although it was broken within the first 30 minutes of trading in the Qs. Now, you can also see there was a slight pause as after it broke through, and a little pause right here that suggested traders stepped back to see if there was enough strength in the market to continue moving price higher. And of course, then the breakout occurred, and the breakout occurred here, which suggested there was enough strength. Now, breadth expanded very nicely on this move to the upside. So right now, looking at this short-term relative basis, support is now at 402 in the spiders and 296 in the Qs. Now I want to look at this at a little bit longer term time frame. Now this is a daily chart of the spiders and a daily chart of the Qs. Now this is the rotational pattern that I was talking about on the 30-minute chart right through here, and you can see we broke through this 402 area. Next level of resistance is going to come up to about the 410 area. That's a really important area. If that's broken through, then we're looking at about the 418 area as the next upside resistance, and then above that would be a breakout in a greater degree time frame rotational pattern. So keep in mind the fractal nature of the market, in that this is a rotational pattern on a daily basis, and this is on a shorter term basis, on a 30-minute basis, and you can see the difference right there. Now, the same thing is occurring in the Q, so you can see that the breakout, this was the 295 area, and you can see the breakout here up, trading right up to the 299, almost the 300 level. Next level of resistance is going to come in about 310 up to this high, which is about 313. So that's the next level of resistance, keeping in mind the support levels. Now, this move higher, both in yesterday and today's trading, was all based on a news event of the potential for the Fed stepping back from raising interest rates. Should that occur, and should another Fed president come out and say something different, the potential for this to get completely retraced is certainly there. But unless or until we begin trading down through this now short-term support that was resistance, the trend is up, and the next upside resistance is going to be 410 up to about 418 in the spiders, and it's going to be about 310 up to about the 313, 314 level in the Qs. volume really didn't expand that greatly in terms of the spiders and the Qs, but breadth was very nicely strengthened as well. Looking at another daily chart, you can see a little bit clearer here the rotational pattern that we've been in. And then, of course, you can see this move to the upside. Next upside resistance is 410, which is pretty close to the lower extreme of this area of rotation, and then going up to about the 418 level. Looking at the same thing in the Qs, you can see they're right at this 300 level in the Qs, which is this level of support, now resistance. And then the next level would come in right about the 314, 310 up to 314 level in the Qs. Once again, volume really not increasing in this move, so it is a little bit suspect. Although the only other thing that occurs is that breadth is supporting this move. As of right now, breadth is supporting the move. Now, when we do see a breakout like this, it is typical to see it's not always 100% probability, but it is typical to see a retest of the breakout point. Now, the Qs have extended up high enough that I would doubt that they're going to retest the breakout point. Spiders could do that, but we'll have to see what happens on Monday morning. Now, on Monday, if we open up higher, it's going to be really important because breadth reached a pretty significant level in today's trading, that if there's a divergence in breadth on Monday at the open on higher prices, then that would suggest some type of rotation back to the downside or pause. Now, we closed near the high of the day. That suggests the market wants to go higher in Monday's trading. It would have continued going higher except for the fact that the market closed. So if there is higher prices, watch for a divergence in breadth. Now, breadth has a lot more room to expand. It could go up another 1,000 shares before it gets to an extreme. So it's going to be very important to see what happens in Monday's trading, especially in that first hour of trading. Now, we did reach a point of being extremely overbought in the NYSE and approximately overbought in the NASDAQ. So this does not preclude the market from moving higher in Monday's trading. So just be patient and see what information the market gives us Monday to determine whether we're going to see rotation back through this range again, or whether we're going up to test the longer term extremes at 410 and then up at 310 up to about the 314 level in the Qs. Going to be an interesting day on Monday. This move off of the low, certainly, let me get back to the shorter term chart. This move off of this low here was certainly a surprise and was certainly based on a news event. So it could be speculative in trading, but if there's any indication that the Fed is not going to step back on interest rate increases during the summer, then we have the potential of seeing this entire move collapse to the downside once again. It was surprising. I really thought when we broke through here on yesterday's trading that we would see extension out. We did not. In fact, in the first hour of trading, you can see that we didn't see any follow through. We traded back above support, or what was then resistance, and then paused. And then, of course, this breakout right here was a pretty key event that suggested that we were going to see some type of rotation back through this range. And I talked about that, I think it was in Monday or Tuesday's briefing, that the potential that if we broke through here, or we tested this level here, that we could see another rotation back up and a potential test of the 402 area, and that's exactly what occurred. So it just depends on what information the market gives us on Monday at that first hour of trading to determine potentially what the next move is going to be. Have a great weekend. I'll pick this back up on Monday for subscribers.